Welcome to Smart Stock Watch. Today is 2026 through 2/19. We're covering CF Industries' fourth quarter and full year 2025 earnings release, which the company published on February 18th, 2026. With me is John, senior analyst at Smart Stock Watch. John, give us a snapshot of why this report matters.
Thanks. CF Industries reported strong full-year and Q4 results, driven by higher selling prices and constructive global nitrogen market dynamics. The company delivered solid cash generation, returned significant capital to shareholders, and reiterated major strategic projects, all items investors are watching in the fertilizer and clean energy transition space.
Revenue and profitability overview. Let's start with the top line. CF Industries reported Q4 net sales of $1.87 billion and full-year sales of $7.8 billion. John, what drove these revenue gains?
Higher average selling prices across all segments were the key driver, reflecting tight global nitrogen supply, geopolitical disruptions, and strong demand from major importers like India and Brazil. Sales volumes were roughly flat year-over-year for the full year, but price strength pushed revenue significantly higher.
How did that flow through to margins?
Gross margin expanded. Q4 gross margin was $765 million, a 40.9% margin. Full-year gross margin rose to $2.72 billion, 38.5%. That margin expansion reflects price gains outpacing higher natural gas costs, along with favorable product mix and operational execution.
Earnings, Adjusted EBITDA, and cash flow. On earnings and cash, CF reported Q4 net earnings of $404 million, diluted EPS $2.59, and Adjusted EBITDA of $821 million. John, how compelling are these numbers?
Very solid. Q4 Adjusted EBITDA of $821 million shows strong operating cash generation even after higher realized natural gas costs. On a full-year basis, adjusted at $0.89 billion and free cash flow near $1.79 billion underpin robust cash capability, which funded buybacks, dividends, and large capital programs.
Anything notable in the cash flow statement?
Yes, net cash from operations was $2.75 billion for 2025. After CapEx and distributions, free cash flow remained strong. That allowed $1.7 billion returned to shareholders and meaningful balance sheet activity during the year.
EPS forecast. The Street was forecasting EPS of $2.50 based on a survey of 5 analysts. CF reported $2.59 diluted EPS for the quarter. John, how significant is this beat?
It's a clear beat versus consensus. A 0.9 beat on a 2.50 base is meaningful in this sector and underscores operational leverage to higher selling prices. The company did not disclose a separate adjusted EPS figure for the quarter, so we used the GAAP diluted EPS of 2.59 cents as the comparable metric.
Would you say the beat was driven more by pricing or cost control?
Primarily pricing and favorable product mix. Higher realized natural gas costs did pressure cost of sales, but price increases and operational execution more than offset those headwinds, delivering the EPS upside.
Operations, production, and Yazoo City outage. The operations section mentions strong ammonia production in 2025, but an expected dip in 2026 due to the Yazoo City outage. John, what's the operational impact here?
CF produced about 10.1 million tons of ammonia in 2025. However, an incident at Yazoo City in late 2025 will constrain 2026 production. Management expects roughly 9.5 million tons in 2026 due to ongoing outage and delayed equipment delivery. That will temporarily reduce volumes for upgraded products like AN, though the company expects higher margins from North American cost advantage to persist.
The release also records $76 million in asset impairments. Any color?
2 impairments. $51 million tied to suspending the Donaldsonville electrolyzer project and $25 million related to damage at Yazoo City. The Donaldsonville decision reflects management prioritizing higher return, low carbon ammonia pathways with CCS over the electrolyzer route at this time.
Strategic initiatives, Blue Point JV, and decarbonization. CF continues to push its low-carbon agenda with the Blue Point joint venture and Yazoo City CCS project. John, how strategic are these moves?
Very strategic. The Blue Point JV with JERA and Mitsui will build autothermal reforming ammonia with CO2 capture at the Blue Point complex. CF consolidates the JV in its statements and recorded significant JV CapEx. The Yazoo City CCS agreement with ExxonMobil targets up to 500,000 metric tons CO2 sequestration annually. These projects position CF to capture emerging low-carbon ammonia demand and potential tax credits, Section 45Q, supporting long-term demand diversification.
Does this change the investment case materially?
It enhances the long-term growth and ESG narrative, but execution and funding risk remain. Investors will watch project timelines, cost control, and any additional capital needs closely.
Capital management, buybacks, dividend, and debt. CF returned $1.7 billion to shareholders in 2025, repurchasing 16.6 million shares for $134 billion and declaring a 50 quarterly dividend. John, how do you view capital allocation here?
The company is balancing returns and growth. Repurchases materially lowered the share count, 10% reduction versus end of 2024, and the dividend continues. At the same time, CF issued $1 billion of 5.3% notes and redeemed 2026 notes, so leverage increased but was managed via refinancing. Investors will look at CapEx needs for Blue Point and Yazoo City projects against remaining buyback capacity.
Any red flags on leverage?
Long-term debt sits around $3.2 billion. That's manageable given the strong cash flow profile, but the combination of large ongoing CapEx, $1.3 guidance for 2026, including JV, and shareholder returns means CF must execute on cash generation and project funding assumptions.
Risks and management commentary. The release includes a CEO quote and an extensive safe harbor section. John, what did management emphasize?
CEO Chris Bohn highlighted operational strength, capital returns, and investments in low-carbon growth. Management emphasized disciplined capital allocation, safety metrics, and confidence in North American cost advantages. They also flagged typical industry risks: natural gas price volatility, project execution, Blue Point and Yazoo City, and global supply uncertainties.
Do they provide guidance for 2026?
The company provided key 2026 expectations: gross ammonia production around 9.5 million tons, Yazoo outage impact, consolidated 2026 CapEx of roughly $1.3 billion, including JV, and continued capital returns. There's no formal EPS guidance in the release. Investors will look for management commentary in the conference call for more color.
Closing, investment takeaways, and next steps. John, wrap this up for investors. What are the main conclusions, and what should viewers watch for next?
CF had an excellent 2025. Revenue and margins expanded, earnings and cash flow were strong, and the company returned significant capital. Key watch items: the pace and cost of the Blue Point project, Yazoo City outage remediation timeline and impact on 2026 volumes, natural gas price movements, and how management balances CapEx and buybacks. The upcoming conference call on February 19th should provide helpful near-term cadence and clarifications.
Thanks, John. That's a concise summary.